If I was 16 to 17 years old and I had to become a millionaire all over again, this is exactly what I would do. My first goal would be to get to $2,000, and I would do this by starting a small business. I would go and start power washing streets or start cutting grass. Now, to get money to fund that, I would most likely sell some electronics that I have laying around. But you can always get a normal job. Once I reached $2,000, I would begin value investing in the stock market. Meaning I'll start buying $1 for 50 cents, buying stocks that nobody's talking about, being a contrarian in the market. This would help me have a crazy exponential growth to get to around $100,000. Once I have $100,000, then, only then, would I think about leaving my job or whatever I am doing on the side. From there, I'd continue value investing to help me reach $1 million. Real quick, before I mention anything, notice the little comment at the bottom here. No ETFs, no blue chips, no large caps, no hype stocks, no IPOs. Hey guys, how's it going? My name is Charlie Marr, and today I'm going to be making a video talking about making millions in the stock market. I will also be doing a reaction video to Charlie Munger and Warren Buffett in an annual meeting talking about this. So what we just saw is a video that I posted in the very beginning of last year. It was either towards the end of 2019 or the beginning of 2020. I don't remember the exact date. And it's pretty much me just talking about how I would practically every single time make $1 million and how I would do that again. And as you guys heard, it's me talking about how I wouldn't even be investing in stocks at first. I would be doing something smaller where I can make more money. Once I have a decent amount of money, then I'd start value investing. Of course, the comments got a little bit crazy because people were asking like, okay, how did you just jump from $3,000 to $100,000? Not even the professionals can make high returns. How are you going to beat them? You know, so like they started calling me foolish and just, it didn't click for them. And actually I made a video talking about one of the comments, which I believe was talking about like, how are you going to beat the professionals? Anyways, so I'm going to show you two more TikTok videos that I made, and then we're going to move on to Warren Buffett and Charlie Munger, pretty much confirming everything that I'm talking about. And, you know, I hope it helps some of you change your mentality, your mindsets in the market, and makes you understand what you can actually achieve when you're following the right path. Because that's something that I'm always talking about, that there is a very clear path to making millions in the stock market, especially when you're working with small amounts of money. And it's the 3-stage theory, which we'll kind of break down as we go through the rest of the video. So let's go ahead and watch the other two videos real quick, and then we'll kind of move on from there. Let me see if I can kind of guess which one it is. Maybe this is the first one. Okay, so here's one of the, here's one and then the other one. So let's go ahead and listen to this one. Did you know the less money you have, the higher returns you can make on your investment? Small money has a lot of opportunities that big money can never take. You need to start using this information to your advantage. In fact, you could even have upwards of over $1 million and still have a minimum of 50% returns year over year. Notice what Warren Buffett is about to say that here.
That I think could compound $1 million, or at least they could earn 50% a year on $1 million. Have that as an expense.
Emotions fluctuate the same. We're all subject to the same influences. In other words, we have to think and feel differently from others, and that's not easy.
You have got to start being a contrarian and buying stocks where nobody's looking, when nobody wants them, when they're having issues, where you get the best discount. That's how you make big money. Okay, so that's the second part. And then I made another video responding to the comments, which one of them was pretty much kind of making fun of me and mocking me, like, how are you going to beat the professionals? Not even Warren Buffett could do over 20%. How are you doing it? You know, they were, you know, so that's the next video. Let me see if I can get that one. I hope it's this one. Okay, yeah, it's this one. Perfect. So the comment, but if anyone can learn how to get these returns by following you, why does Warren Buffett average just 20% year over year? you know, and there were so many comments like this, and people saying you're jumping too fast, you don't know what you're talking about, all those small stocks are dangerous, you know, that's not how you make big money, stick to all that kind of crap. But this is one of the videos that I made responding to this, and hopefully all this starts to make sense, and then we'll move on. I really wanted to touch base on this type of question because it's a big misconception. So if big hedge funds and massive firms could barely even get these returns year over year, what makes you believe you can beat the professionals? Let's go over an example. Let's say that you invest $1 million, all your money, in a $1 billion market cap stock, and that stock doubles in size, so now it's worth $2 billion. Well, you made 100% returns on your investment. If a $100 billion hedge fund invested the same amount, $1 million, they would be up 0.1%. And it's not like they could invest over $1 billion into this stock because it's literally worth $1 billion. So as you're making more and more money, investment opportunities are literally closing one by one. Big money can't do what we can. Okay, so hopefully after watching these 3 videos, you have an idea of what I've been talking about, how like I would first make a decent amount of money. Once I have that money, I would start value investing, buying $1.50, focusing on those small opportunities that big money can't have, which will help me achieve high returns. And then once I have a decent amount of money, only then would I consider actually leaving my job. So I would still have a job, even upwards of 100,000. You know, that's when I would start considering maybe leaving if I have been consistent. And pretty much how we have the ability to beat the professionals. And because of what I just showed you, I just gave you a perfect example. So now we're going to watch a video over Warren Buffett and Charlie Munger in an annual meeting that pretty much start talking about all this. And I just find it so funny when people try and like make comments on my TikToks and stuff, but it's like, I think you're hating, and you're just kind of being ignorant, and you're just hating because you're hearing it from some random guy on TikTok who claims to have a lot of money, but it's not just my words. First of all, it's what I've been doing, yes, and it's been working for me, but again, like I always say, maybe you don't want to hear it from me, well then hear it from the big guys. So let's go ahead and watch that video now, and I'll make comments as we go through it. It's not called Alibaba. It's this one, but I don't know why it says Alibaba. So let's go ahead and go from the very beginning, and let's go ahead and get into it right away.
Good afternoon, Mr. Buffett and Mr. Munger. My name is Grant Morgan. I'm here from New York City. Earlier, you had acknowledged that it is a more difficult investment and business environment today than it was when you first started out. My question is, if you were starting out again today in your early 30s, what would you do differently or the same in today's environment to replicate your success? In short, Mr. Buffett, how can I make $30 billion?
Start young. Charlie's always said that the big thing about it is we started building this little snowball on top of a very long hill. So we started at a very early age in rolling the snowball down. And of course, the nature of compound interest is it behaves like a snowball of sticky snow. And the trick is to have a very long hill, which means either starting very young or living to be very old. I would do it exactly the same way if I were doing it in the investment world. If I were getting out of school today and I had $10,000 to invest, I'd start with the A's. I would start going right through companies, and I probably would focus on smaller companies because I would be working with smaller sums, and there's more chance that something is overlooked.
That's pretty much exactly what I said on my TikTok videos. You want to focus, when you have a small amount of money, you want to focus on small companies because they're being overlooked. They're not really being manipulated or crazy moved by hedge funds. They don't even bother sometimes. There might be smaller ones, but the whole point is what I showed you. It's you have a higher percentage of making a high return. Of course, the risk is higher, but when you know what you're doing and when you've been following everything that I've been kind of preaching and showing, and it's not just my stuff, it's stuff that all these guys have been showing us, you can lower the risk. You know, I mean, you start looking into everything when you really understand the business and you start following all the rules, protocols, and the whole checklist. You can avoid value traps. You can avoid all those risky, dumb penny stocks that you should be avoiding, which is like 90% of them. So I do agree on that end. But I mean, you're hearing it here himself. If he had $10,000, he would be going through all the companies from A, literally, you know, and that's just him telling you that. He scans as many companies as he can. So he goes through as many of them, and he would be focusing on small companies to achieve higher returns
in that arena. And as Charlie has said earlier, it won't be like doing that in 1951 when you could leaf through and find all kinds of things that just leapt off the page at you. But that's the only way to do it. I mean, you have to buy businesses. Or little pieces of businesses called stocks, and you have to buy them at attractive prices, and you have to buy them, and you have to buy into good businesses. And that advice will be the same 100 years from now in terms of investing. That's what it's all about. And you can't expect anybody else to do it for you. I mean, people will not tell you about wonderful little investments. It's not the way the investment business is set up. When I first visited GEICO in January of 1951, that rest of that year, I subsequently went down to Blythe and Company, and actually to one other firm that was a leading, Geyer and Company, that was a leading analyst in insurance. And you know, I thought I'd discovered this wonderful thing, and I'd see what these great investment houses that specialized in insurance stocks said, and they said I didn't know what I was talking about. You know, it wasn't of any interest to them. You've got to follow your own, you know, you've got to learn what you know and what you don't know, and within the arena of what you know, you have to pursue it very vigorously and act on it when you find it. And you can't look around for people to agree with you. You can't look around for people to even know what you're talking about. You know, you have to think for yourself. And if you do, you'll find things.
You know, that's one of the biggest problems you'll face is when you're doing your own analysis and like going through your own stocks. It's a very lonely world, especially being a contrarian. But in the value investing world, you know, if you go through my old TikTok videos or like through old videos of me just talking about certain investments that I thought were great, almost everyone was hateful. You know, when I bought Funko, when I bought Charles & Colvard, when I thought Big was a good stock, when I thought Rick was a great stock, G3, NC, VRS. I mean, there's so many, and people, they just don't see it. You know, they're either looking at the stock chart and they see that the stock's been falling for 5 years. So they're like, oh, like, what the heck is this guy thinking? Like, he doesn't know what he's doing. It's been falling for so long. Well, yeah, because it's been overvalued for 5 years, but now it's not. Now it's a great buy and it's time for it to turn around. They just won't see it, you know, and nobody's going to, you know, to kind of help you, you know, so you have to. This is why it's really important to understand and really know how to value a business and choose the right one and stick to it. I mean, there's been times where I've been against the whole crowd and nobody believes in it, and I've turned out to be right and made a lot of money. It happened not too long ago with the private prisons. You know, they were making a lot. Anyways, I'm not going to talk about that too much, but let's go on and go on. I just wanted to mention that like that is one of the hardest things you'll face, is that like you'll kind of even doubt yourself because everyone starts telling you their side why you're wrong. And most of the time, you'll feel like you're wrong because you're like, why is 99 people telling me there's 100 people in the room? Why are 99 people telling me I'm wrong? Am I wrong? You start doubting yourself, and then you're actually right. You know, but because you actually looked at the facts and the numbers, remember, you're in a room full of idiots and ignorant people who don't actually know what to do. So anyways, let's go on.
Charlie?
Yeah, the hard part of the process for most people is the first $100,000. If you have a standing start at zero, getting together $100,000 is a long struggle for most people. And I would argue that the people who get there relatively quickly are helped if they're passionate about being rational, very
Common sense,
eager and opportunistic, and steadily underspend their income grossly. I think those three factors are very helpful.
Recently at a talk at the Wharton
So that is something that kind of helped me. I was living very poor. I did everything I can to save every dollar. I was eager. I had that passion. I had a job. I was trying to save as much as I can to invest it, because I was trying to compound it. Every dollar I saved, I knew in the future would end up being $10. And every 10 would be 100. Every 100 would be 1,000. Every 10,000 is 100,000. Every 100,000 would be 1,000,000, and it keeps going over time. So I was living like I was poor, I wasn't going out much. I was trying to eat. I was eating for like a couple dollars a day. You can get rice and beans and just, survive, go to cheap stores, use coupons, save money. There's so much you can do to kind of help compound that and get you to that first 100,000.
Business school, Mr. Buffett, you indicated that you were talking about the problems of compounding large size, which I appreciate and understand. But you indicated, you're quoted in the local paper as saying that you are confident that if you were working with a sum closer to $1 million, that you could compound that at a 50% rate. For those of us who aren't saddled with the $100 billion problem, could you talk about what types of investments you'd be looking at and where in today's market you think significant inefficiencies exist? Thank you.
Yeah, I think I may have been very slightly misquoted, but I certainly said something to the effect. But I think I talked about this group I get together every 2 years and how I poll that group as to what they think they could compound money at it with 100,000, a million, 100 million, a billion, and other types of sums. And I pointed out how this group of 60 or so people that I get together with every couple of years, how their expectations of return would go very rapidly down this slope. It is true. I think I can name a half a dozen people that I think could compound $1 million, or at least they could earn 50% a year on $1 million.
Real quick, I did want to make this note. I've noticed that all these people like Joel Greenblatt, Mohnish Pabrai, Warren Buffett, Charlie Munger, Peter Lynch, Seth Klarman, a lot of these people all have like a group. And it ranges from as little as 60 people to as much as 200, 300 people. And it's like people that have been together for a really, really long time, for decades. And it's filled with intelligent, really rich people because, they've been working together and helping each other out, bouncing ideas off each other, and they meet up every once in a while. But I've noticed that they all have that one group that they each created themselves. It's pretty cool. I just wanted to throw that out there, and that's what he's pretty much talking about. I don't know, and I know he has another group with like over 100 people, I'm pretty sure, with 100 people, and Charlie Munger has one with 100 people as well. But anyways, I mean, you're hearing it himself. If he had $1 million, he knows he can do 50%. Let's go on with the rest, though. I just wanted to throw that out there.
That is an expectation. If they needed it, I mean, they'd have to get their full attention to be working on the sum. And those people could not compound money, 100 million or a billion, at anything remotely like that rate. I mean, there are little tiny areas which, if you follow what I said on the screen there on that Adam Smith's interview a few years ago, if you start with A and you go through and you look at everything and you find small securities in your area of competence that you can understand the business, I think you can, and occasionally find little arbitrage situations or little wrinkles here and there in the market. I think working with a very...
That's kind of how I feel with Alibaba. Like, I usually don't buy stocks like Alibaba, but there's just a wrinkle in the market. There's an opportunity there. So, like, I'm not focused on... I usually do stage 1, but to me, Alibaba is like a stage 2, stage 3 type of stock. Technically, a stage 3 stock that dropped to stage 2. And that's funny because that's what he's talking about. Like, sometimes you'll run across big opportunities like that aren't small companies.
Small sum, that there is an opportunity to earn very high returns, but that advantage disappears very rapidly as the money compounds. Because from $1 million to 10 million, I would say it would fall off dramatically in terms of the, because there are little, you find very, very small things that you can make, and you're almost certain to make high returns on, but you don't find very big things in that category today. I'll leave to you the fun of finding them yourselves. I mean, it'd be terrible to spoil the treasure hunt. And the truth is, I don't look for them anymore. Every now and then I'll stumble into something just by accident. But But I'm not in the business of looking for that. I'm looking for things that Berkshire can put its money in. And
It's funny how he's he's not willing to tell anyone anything. He's not going to spoil it. He's like he you know, I would hate to spoil the treasure hunt. You know, like I would leave it up to them to figure it out. And I'm kind of like the treasure map here, not in a cocky way, but I'm kind of like sharing it with everyone, like the path to making millions of dollars in the stock market. And I've even broken down a bunch of other stuff. But anyways, you can have high returns in the stock market. And like you said, it will deteriorate over time. It's not, a very small amount of money could have a huge return on investment. But yeah, as you get more and more, I mean, it starts to like deteriorate. And over time, then you forever have those typical averages that professionals have, anywhere from 10% to 30%, 20%, 25% year over year on average. Then that's where you kind of start lingering around and stick to. But before that, this is kind of why I always talk about, like, you shouldn't follow what big money's doing. You shouldn't be following what Warren Buffett teaches now, because it's not how you're going to make a lot of money. You shouldn't be sticking to all these crazy big market cap stocks or trying to find those 10 baggers at this time. It's not the appropriate time. We've gone over this example in the past that if you invested in Amazon and Apple and Facebook, if I invested in Apple, Amazon, Facebook, any of those 10 years ago, I would not have as much money as I have now. Yes, you could have turned $10,000 into $200,000. You would have made a high return, you know, that's good. But it wouldn't compound as much because you're not rinse and repeating, compounding, doubling your money multiple times with other stocks where it's compounding like crazy. Once you have millions and millions of dollars, then you can try and find a 10 bagger. I mean, it's not the same. Again, when you have $10,000 and you're trying to find a 10 bagger, you're going to turn those 10,000 to 100,000, and you're like, oh, it'll happen in 5 years, 3 years, 10 years, whatever it is. Turning $10,000 into $100,000, I'm sorry, but it's nothing. If you're in it, and if you're in this world to make money and to make millions of dollars, and you're eager and just money hungry, you will make more money with a side hustle than in 5 years turning 10,000 into 100,000, or in 10 years getting a 10 bagger. You know, that's not how you do it. But again, if you have $1 million, it's a different story. You know, if you turn $1 million into 10 million, you know, that's in 10 years, you made $1 million a year, or whatever the math is, or in 5 years, you know, or if you have $10 million and you turn it into 100 million in 10 years, that's a different story. You're making millions a year, but again, that is big money. So let's go on with the next, it's about to finish here.
And that rules out all of that sort of thing. Charlie?
Well, I would agree, but I would also say that what we did 40 or so years ago was in some respects more simple than what you're going to have to do.
Right.
We had it very easy compared to you. It can still be done, but it's harder now. You have to know more. I mean, just sifting through the manuals until you find something that's selling at 2 times earnings, that won't work for you.
It'll work, it's just you won't find any.
Yeah.
So that last part, before this video ends, I'm about to end it here. I actually don't agree with, and I've been doing it myself. I think they're just not in that world anymore, which he said it himself, that every once in a while he'll come across a stock, and he's not going to mention names or anything, but like, he's just not in that world anymore. I mean, he has to focus on stage 4, stage 3, which is where he's at. So I don't think they're as experienced in that level. They're experienced, but they're not seeing that world anymore. And for someone like me who's seeing that world, those opportunities are out there. 100% they're out there, and multiple times throughout a year. And I've gone back, and during bear markets, they've been there. And even if the whole market and everything was underperforming and everyone was red, they were the ones that were performing the best. Or you could have turned out in green, and even through bull markets, compounding through those methods, you would end up with amongst the highest returns out there, beating tech stocks, growth stocks, beating all that stuff, you know, which we've talked about all that stuff in the past. Is Value Investing Dead? You can go watch that video. Anyways, that's the end of this video. I hope you learned something today. I will see you guys on the next one. And yeah, I'll see you. Let me know what you guys think in the comments below. Make sure to like, comment, and like.